He's a part-time trader, but he literally spends hours every weekends to learn and grow more in this trading line. And the best thing that I forgot to mention that this guy has been in no negative red month for the last 3 years. And that's why we call him the green guy.
To have an expectancy, I need to backtest more than 1 year.
MDD and max loss is also so controlled.
Exactly my point.
You don't need to do the complicated stuff to enjoy the fruits of market.
Okay, we will start to have problems only when we encounter series of losses. Now look at the expectancy here. My win percentage is above 70. My risk reward is almost 2 to 1. My expectancy is also extremely high. And remember, this comes with the built-in slippages. Okay.
I said, bro, you have to come and share your learnings. It took me 1 month to pull him and say, bro, please come on the podcast. Hey, hi friends, this is Nitish, founder of Stockmock, and welcome to another episode of the podcast series that we have been doing with so many guests who are sharing their journey and learnings with us. I'm sure with each podcast, we are getting some learnings that is helping us in our trading journey in one way or the other. Some people are showing their strategy. Some people are showing that for how long they have been in this market and how psychology is helping them. Some are sharing that how they actually lost big amount of money and how they recovered. And all of them are properly telling that there is no holy grail in this system. You just have to follow the proper systems and avoid the noises on Twitter properly. And I think that was the gist because of which we started the podcast series as well. And today our guest is someone who is not so popular on Twitter, or rather he's not even active on social media platforms. But let me tell you, this guy is so smart. I got to interact with him when we launched Stockmock in late 2019, and he was a very early adopter of Stockmock. And he has so much to offer. He has so great understanding of the systems whenever he's designing the system that he has helped Stockmock become better. And I'm telling you, he's one of the top guys who has helped Stockmock become better through his inputs, through his lots of suggestions, so many things. So I requested him that his name is Ravi from Chennai, that I said, Ravi, you must come on the podcast. But because he was not so active on, he likes to be under the hood. He never shows his face. Even in today's podcast, he will not show his face. So I said, bro, you have to come and share your learnings. It took me 1 month to pull him and say, bro, please come on the podcast. But before I invite him, I want to share news that you might know that we have a simulator on Stockmock, and we have made our simulator grown to the next level by introducing so many statistics like estimated margin, Greeks, probability of profits, net credit. So you can now go to Stockmock simulator and see so many statistics that will help you decide if your strategy is good enough for you or not. Okay, so without any wasting time further, let me invite my friend Ravi. Hey Ravi, what's up, bro?
Hey Nitish, thanks for all the great words. I'm not sure if I deserve it, but thanks very much. Thanks for having me here.
Well, thanks to you for accepting the invite after 1 month of following up.
Okay, yeah, how are you doing?
I'm doing great. By the way, for our listeners, I forgot mentioning that Ravi is a part-time trader. That's why I'll tell you why this podcast is going to be amazing. It's because Ravi is a part-time trader and he loves doing his daytime job. He's in IT industry. He writes code. He does testing a lot. He's managing team of so many people. And the best thing that I forgot to mention, Ravi, please correct me if I'm wrong, that this guy has been in no negative red month for the last 3 years. And that's why we call him the green guy. So whenever I'm in call with him, I say, oh, so what's up, green guy? How are you? So Ravi, right? Is it right that your streak of non-losing months is still going on?
Yeah, that's right. I mean, touch wood, and with God's grace, it's been good so far. So I hope it remains the same in coming weeks as well, coming months as well, right? So yeah, that's correct, right? So
That's amazing.
yeah.
That's amazing. So listeners, I'm sure Ravi is going to add so much of knowledge. It's his first F2F. He has been in no red month for last 3 years. So uh, let's be very attentive of whatever he's sharing. So Ravi, over to you. The stage is all yours. We are ready to just take in what all you have to give.
Sure. Thanks very much, Nitish. I have some, slides prepared. Let me, start sharing my screen. I'll be comfortable with the content in front of me. As you know, this is my first face-to-face or podcast kind of thing that I'm doing. So let me share my screen.
Yeah, you have the rights. You can share.
So the content that I really wanted to talk about, right? So can a real retailer win or gain money in the markets, right? We'll talk about what real retailers are, and what are the constraints that they undergo, etc., etc., right, during the course of this podcast, right? Just to give a very short introduction about myself, I've been in market. I've been a very active participant of market for about 9 years now, and I started with positional stock trading. And as you know, the positional stocks deals only with the long side of it. So I wanted to enter short side of the trade as well. So I shifted to intraday stocks. And with my like you said, I'm a very passionate software engineering guy, right? So it's like that's always going to be my first priority, any day until probably I retire from my job. Software engineering is going to be my first priority. But trading is also my passion, like, so and also trading gives me extra money. So I always do both. Like, my priority is going to be software engineering, but I'm going to trade as well. Okay. So as my priorities, as my workload in my job increased, right, so I couldn't focus on tracking the entry setups in multiple stocks. So index is the most liquid instrument that we have in our country, right? So I wanted to switch to index trading. Okay. And then that's when I started to get into the FNO space, right? So when I explored the futures and options, I understood that there is an edge of theta decay for options. So I wanted to focus only on options. Okay. So my market observation has always been in sync with how Nifty moves rather than Bank Nifty, right? So Bank Nifty, in my perspective, is very wild. So I I stick to Nifty. I just do only Nifty options trading, nothing else, right?
Okay.
So until this point, right, even though all my trades are based on signals, alerts, etc., there is always some amount of discretion, right? So how much position should I go in, at some point of time? What's going to be my stop loss, etc.? There is always some amount of discretion based on the charts that I see, right? So it's always, from my perspective, if somebody is doing a job, if there is a discretion, it's not scalable, because I cannot predict how much position that I want to go if I don't have a clear plan until I punch my order, right? If I don't have a clear plan of what's the risk that I'm taking. So I always wanted my systems to be completely automated, right? So that's where Stockmock helped me to fine tune my systems and made it completely compatible with respect to automation, right? So all my systems are right now automated. So I would like to emphasize that I trade Stockmock based strategies. We'll see why I am highlighting based, the word based here, right? So I backtest using Stockmock, but the signals are not just the way that Stockmock generates, right, from a time put a straddle. That's the way the trades are executed. But there is always a difference. I add a layer on top of the Stockmark results to trigger my entry points, right? So with those kind of Stockmark based strategies, these are my results so far, right? My capital has been up by 6x, and my peak drawdown has been at 5%. And thankfully, touch wood, there are no red months so far. And the most important point is that, right, so I don't want too much of a swing, right, during intraday or during any month of time. So you can see my average loss is around 0.3%. My average gain is 0.8%, right? This might not be very attractive in terms of social media screenshots, but this is what helps me to keep my cool, during the entire trading process, right? And My relationship with Stockmock, as you know, like I've been talking to you for a long time, so it's much more than transactional. I always, consider Stockmock as, the final piece of the big jigsaw puzzle of trading. And so, yeah, in one line, right? I've been trading before Stockmock as well, but Stockmock helped me to level up my trading, right? So helped me to add a maturity level to my trading, right? Um, Now coming
So
to the
just one point here I want to highlight. The very first slide you mentioned that you are using a Stockmark based strategies. So what I am assuming is you are thinking beyond raw Stockmark. And that's what I'm very interested to know what you are doing. Obviously, I know you will share something. And second thing that you mentioned is that the analytics that you showed is not as lucrative as it is shown in the social media platforms. But I think you covered that in your headline, real retailers. So we as a real retailers don't want too much of swing, and we are happy with what the statistics that you are showing. We don't want to get rich in 21 days at all. Yeah, please carry on.
okay. So yeah, so the thing is, right, what I want to do, right? I wanted to work in a company during daytime, and I also wanted to trade, right? So I think most of the trading ecosystem, or I would say trading community, belongs to this category, right? It's not a lot of people are full-time traders.
Mhm.
So just to make sure, right, but what happens is that we tend to spend time on social media and we compare our strategies, our results with full-time traders. I call them, prodigy retailers, right? Because they are prodigy, right? There is a difference between a guy who is just starting to play cricket and Sachin Tendulkar, right? So you cannot, compare both of them. You can take inspiration from them. So in order to make sure that our expectations are real, we'll have to understand the constraints with which we'll have to operate, right? For example, in terms of capital, you know the prodigy retailers have very high capital, right? But what we have is a very low capital, right, compared to them. And similarly, the big guys have special leverages, and also the cost associated with the trading, right? Because a person is generating so much volume, the amount of brokerage that they may pay is very, very less. And that's not the case with us. We have to go with the general public brokerage rates, right? And
Mhm.
also, this is our money. It's very difficult to see a negative day on our money rather than in others' money, right? Same way with respect to time, you can see, like I said, I have a day job. Okay, I cannot, for 6 hours of time, I cannot just like that, view the charts on the screen, take trades, things like that. So that's a very big difference, right? The amount of effort that you put in the live market is directly proportional to, the amount of gain that you make. Okay, and
Hmm. The amount of efforts that you are willing to put is directly proportional to the returns that you are going to get. Okay, yeah, nice.
and no access of information, right? Because these prodigy retailers are full-time traders, right? They form a community, they share information based on the experience, right? But if you see, what we have is the information from books, information from YouTube videos, information from a podcast like these, etc., etc., right? So that's a very big difference, right? So a big time trader sharing his live experience to another big time trader, so they're always in sync, right? So they can improve the strategy based on that, based on those conferences, based on those interactions. We don't have those interactions, right? So we'll have to slowly scale up in that front as well, right? And obviously, the point is the psychology, right? So because they have huge money, because the amount of risk that they can take is little more, the risk appetite, um, even though we do we can always do like 3 lots, 5 lots, 10 lots, etc. Let's say our salary is like 30,000 a month or 40,000 a month. Can we withstand 15,000 negative MTM on a single day? No. Our mindset always compares the MTM with our salary, right? So yeah, okay, today I got 1 month full of salary on one single day. Today I lost 1 month of salary on a single day, right? So
Right.
this psychology is completely different. So we'll have to understand the constraints with which traders like me operate, right? So yeah, these are constraints. What are we going to do about it, right? So this is where what I want to emphasize, that what are the things that are controllable. Okay, capital is not controllable. We have only what we have.
Yes.
Right. Same way, right? Access to information, watching chart during the daytime, risk appetite, everything is not controllable. But what is controllable is the strategy and the execution of strategy. It's completely in our control, right?
Yeah.
So you can decide on your own strategy. You can decide your risk, for a particular strategy, and then you can focus on the execution. Execution is completely in our control. Nobody is going to, pull your hand when you click a mouse. Nobody is going to say that you cannot automate a trade, etc., etc. Right? So this is where we must focus on. We must focus on a strategy that is uh, that is within our risk appetite, and then we must focus on executing the strategy based on the backtest, right? We must ensure that our execution is very, very close to the backtest, right? That's when we can, make sure that we are doing a very good system trading, right?
Right. And for those who are wondering that how do retail traders still have the special leverages and cost, I would recommend you to watch Arshit podcast that we have done, I think few weeks back. He properly explained how he has some edge, that if some people are doing a straddle with 1.5, 1.6 lakhs, how he does with less than 1 lakhs of capital. So yes, you are bang on right that we should rather focus on what's that in control of us. We have a strategy control, we have an execution control. Yeah, bang on, man.
Thank you. So now, before going into this slide, right, this slide may look very complex, but let me show you, different components, via Stockmock, right? So that we'll come back to this slide, or maybe switch between this slide and Stockmock window, so that we are kind of good. Okay. Can you see my Stockmock screen?
Which is this lovely website, by the way?
This is by my friend, Nitish, who designed a very lovely website. I've been using this for almost, I think, almost 3 years. So,
Yes.
yeah, I highly recommend you to use it. Okay. So,
I will.
all right. Okay. So, the idea is that, right, any system that you want to design, my opinion is that it has to be based on a premise. Okay, what is a premise, right? So some market structure, it could be anything, right? It could be, let's say we have some information, right? There is a opening range breakout. The expectation, the premise is that if it breaks out the higher uh, limit or the high of the opening range, the market will go up. That's a premise. Okay, design a strategy for that premise, and then adjust the risk accordingly. That's the way I usually go. So the premise that we are taking today is that on expiry day, okay, on expiry day, option premiums which are ATM and OTM is going to become zero. That's the premise that I'm going to take. Yeah, I would like to emphasize on one very important fact, right? So start with a high probability setup. Okay. So how do I know something is high probability, right? There are some known facts, especially with respect to the option trading, right? For example, on expiry day, ATM and OTM premiums are going to become zero.
Yep.
Nobody can deny that, right? So these are what you call it as a high probability premise. Okay. So what we are going to do is design a system for this premise and make sure that we trade as per our as per our system during the execution. Okay, so let me just since I am a very much of a nifty guy, I'm going to put a nifty option. The premise is that on Thursday premiums are going to become zero, ATM and OTM, right? All right.
Yep.
Okay, now what I'm going to do is I'm just adding a position here, a straddle, a very simple straddle, 9:30 to my favorite time, 15:15. Okay, this is going to be my timeline. And obviously we know that, right, if the market is going to trend on Thursday, it's going to cost me a huge loss. Okay, so I'm just trying to limit my risk, per leg. Okay, so let me just show you like why 50%. It's on my experience, but you can try a lot of different stop losses to see what is going to be the ideal risk that you want to take. Okay, now let's click back test. I don't want to waste a lot of credits. So let
you have
me
lots of credits, man, don't worry.
Okay, so I'm just going to do it let's say for 1 year. Let me just do it for 1 year. Okay, all right. Okay, now
can you
what
do
I'm
it
going to do,
can you do it for yeah, okay, that's okay.
okay, so what I'm just going to run back test. Okay, so this is one of the strategies that I do trade during expiry day. Okay, but the entry trigger is not 9:30 exactly. I have a different triggers based on different setups. Okay, but as you can see, okay, all right, so to have an expectancy I need to backtest more than 1 year.
Just increase
So
1 day more, that's okay.
yeah, no, it's okay. I'll just go for from 2019. It's fine. Okay, got it. So I'm just going to do a backtest here. Okay, so the premise again, remember the premise. The high probability setup is that it's going to become zero. Okay, let me remove all the days apart from Thursday. Okay, so as you can see, okay, so here we have all the statistics that are neatly displayed. Okay, so I have a win rate of 76%. Okay, my expectancy is going to be 0.36, but I see that like I'm just going to trade one lot, so I see that the max loss is too much and the average loss and win is not really great according to my my expectations. Okay,
what do you
so
think is the average RR ratio should be as per you?
to me, anything more than 1.5 to 1 is okay, right? But ideally, right, I mean this is for one system, but when you look at the portfolio of systems, right, with the numbers that I target is that the max loss must be less than the average win, okay, in terms of magnitude.
Oh really?
Yeah, that's basically how I how I want to define a portfolio of systems.
Wow.
Okay,
I never see someone comparing these two are different stats. They compare average profit on win days versus average loss on loss days, but not the max loss and average profit on win days. Oh, let's see. Let's see. That's great.
yeah, I'll tell you why, right? So see, if my max loss is going to be this much, okay, and average win is going to be greater than that, okay, uh even with a 5-day losing streak, you can gain it back within 5 or 10 days, right? Because the average win itself is going to be much more than the max loss. Okay, so that's the number that I target in general. Okay,
so for our listeners, you have got one great thing that is new for me as well. If your max loss is less than your average profit on win days, the chances of recovery is very fast. Okay.
exactly, right? So now I see that it's kind of a little bit, I don't want to enter both the trades simultaneously. Let's just try to enter which is going down a little bit. Okay, these are like very normal features that you have on Stockmock, readily available. Okay.
Can you please explain wait and trade and why you are doing it for our listeners?
Sure, of course. So the idea is that, right? So the premise comes into picture here, right? So you understand that the premiums are going to become zero. Okay, there is a heavy downtrend, because of the theta decay on the expiry day. Okay, on the premiums. Okay, so I don't want to take both of them. What I want to take is whatever is coming down. Let me just take it. So the advantage of this is, right. So if there is a reversal during the later part of the day, I'll be able to capture this separately, rather than this one getting stop loss hit and then coming down, right? That's the most frustrating thing that happens to many people, right? So hitting the stop loss and then coming back down. So that's why I want to give a little bit of gap here and then go with the way.
You're
Now,
not entering both the legs right away. You are entering after waiting for the premium to decay by 5%. And then you are entering that leg individually.
exactly.
Okay. Yeah.
Exactly.
Okay.
Now, you see, the expectancy here is 0.36. I don't know what's the expectancy going to be. Okay. The reason I focus more on expectancy is that, right, the formula of expectancy has included the average win, the average loss, I mean, in terms of risk reward, and then the win percent. Okay. So the more the expectancy, one of these parameters is going to be more, and the psychology is going to be affected very, very less. Okay, so that's why I always focus on the expectancy. As you can see, so the expectancy has improved, lot improved, right, from 0.36 to 0.46. Okay, as
MDT
you can
improved a lot. Yeah.
yeah, but still, the average profit, average loss is still, I'm not very comfortable with that, right?
Well,
So
just for an because I interact with so many people who are using Stockmock, I'll tell you this setup may look very good to many people because they will say our win percentage so high. RR ratio is also close to 1, not bad actually. Expectancy is close to 0.5, which is decent. MDD is 10%, which is less than 5%. So many people may like it, but but listeners, Ravi is unhappy with it. Let's see what Ravi will find out. Ravi, go on, bro.
okay, see, the thing is, right, why this, why are we losing on so many days, right? So the thing is, most of the times we know why, why there is going to be, even though the premise is very, very strong, right, the premiums are going to go to zero. Why are we simply losing on such a high probability days, right? Because market sometimes is going to reverse a lot, and then it's going to cause a huge problem, especially on expiry days with gamma coming into picture, right? So there is going to be a lot of difficulties in trading that kind of day. So what I'm going to do is, I don't want to lose whatever I have gained so far. So I'm just going to add a trailing stop loss. Okay, so what I'm going to do, I'm not trailing very tightly. Okay, I'm just trading it like 10% is not very bad. Okay, so let's see what do we have. Okay.
For trailing stop loss, we'll add the video here.
Let's see. Okay, okay, okay. Now I'm going to filter only for Thursday. All right. Look at the expectancy now. Okay. 0.83. What was the expectancy before? 0.46.
Yep.
Okay, it's almost double. And look at the risk reward ratio.
Okay.
Okay,
it's 2 times.
So exactly. Even though the win percentage has come down, okay, the expectancy have gone up, indicating the fact that even with lesser win days, eventually the strategy is going to have less swing compared to the previous one. Okay, in long term.
And
This
that's what
is
I
the
also see,
reason.
bro. MDD and max loss is also so controlled.
Exactly my point, right? When are we going to lose the psychological edge? Is we don't have a problems when we are going to gain huge. Okay, we will start to have problems only when we encounter series of losses. Okay, that's when we get doubt on our system. Is this really working well? So if you control this, the amount of time that you execute this strategy in the market is going to last long, right?
Nice.
Okay.
That's nice. Okay.
So now I really wanted to check one thing. Okay. I
Okay.
know that this guy or this particular person is giving me a lot of improvements to my
System.
system as a whole. Let me see if this is really causing any improvement or something like that. So let me just try to do a back test again. So what was the expectancy before? 0.83.
Yeah.
Okay, now let's see what do we have.
So, listeners, we are only
Let's
checking for expiry days. So that's why Ravi is filtering the days so that we only see Thursday results. Okay.
yeah, there you go. 0.86, which is much better than before.
Nice. I'll tell you for me why it's much better, because I see win percentage a little bit higher than 60, because I am a guy who wants to keep at least 65% of the win rate. Yeah.
That's nice. I mean, it's always better, right? You know your psychology much better, right? And I also want to emphasize one more fact, right? No matter what backtesting you do, no matter what paper trading you do, right? The amount of live executions that you do is a lot better teacher than all of these things put together. Okay. And one more fact is that if you are profitable trading one lot, okay, I'm just keeping in mind the discount brokers that we have in India, okay, where it doesn't matter how many lots you trade, the broker is going to remain the same. Okay, so if you are profitable trading one lot, then it's very easy to scale, right? Because the brokerage is not going to increase per lot. Okay, so if I want to trade for a long time with one lot, I need to have this number in my control. All right.
I see. I see. Okay. So, listeners, Ravi, if you can just show the statistics again.
Sure.
So, Ravi has shown the strategy, which is very decent, thanks to Ravi, which has the RR ratio. RR means reward to risk ratio. Reward means average profit on win days versus average loss on loss days. It's 2:1. It's very decent. Max loss is under control, 2,000 rupees. MDD is 4,000 rupees. Calculate if you are doing a straddle for 2 lakh rupees, this will come down to be less than 2.5%. MDD is under controlled. So if I am saying in the worst case scenario, in future, if your MDD is actually doubled or your average day profit, you are achieving 70% of it. Ravi rightly said that if this is matching with your psychology, then the stats are good for you. Yes, Ravi, go on.
See, and also, I mean, these numbers might look very small, okay? But think about in terms of percentage, okay? How much do you want to do? How much capital do you need for one straddle today? Let's say 1.2 lakhs, 1.25 lakhs approximately, okay? Plus you give some amount as an additional for the, a cushion for drawdown, right? Let's assume 1.5 lakhs per straddle, okay? Okay, what's the timeline that we are looking at here? Okay, 2019 to 2022.
More
In 3 years, you have a gain of 66%. Okay, think about it. Okay, 66% in 3 years,
on just
with just
expiry.
you are exposing your capital to the market risk only for 6 hours a week. Nothing more. Okay, just intraday, just 6 hours, you are getting 66% in 3 years. That's like, if you calculate in terms of CAGR, na, it's like 18.5% compounded growth rate.
And people will do something on other days as well. So,
of course,
yeah.
I'm just talking about one day here. Okay.
Yes.
Right. Now, this is the one part that I want to discuss here, like the scaling part of it. Okay. So there are two options here: whether you want to enter a different strategy or whether you want to scale the existing strategy. Okay. So let me just save it. Thursday only, something like that. Okay. Yeah, you have like I have saved a lot of strategies here. So yeah, it's like 3 years of data. Okay.
Yeah. Okay.
Okay. Now what I'm going to do is, Thursday only basket. Okay. So now I'm going to just import the strategy here. Okay. So this is starting at 9:30. Okay.
Okay.
9:30. Okay. So one thing what I typically do, right, I'll analyze on a reversal day. Okay. See, the time when we hit max loss, right? So or much more than the average loss, I'll see at what time the reversal actually is happening, right? It's a manual analysis that I have to do with the charts. Again, based on my experience, right? Most of the times on Thursday, the first hour is kind of very crucial. Okay. So now what I'm going to do is I'm going to enter another on 10:30. Okay. Let me just put it as 10:30. Okay. Same strategy, no difference at all. Okay. So I'm just going to select only Thursday. Okay. Now the same time we'll run for the same time, like August 1st to August 4th, right? This is what we did there, correct? Okay.
So here
I'm
you
just running it right now.
created a two basket. One, the strategy that you have run at 9:30, the same strategy that you are doing at 10:30 also now.
Let's see how the results are. Now look at the expectancy here. Okay. Okay. My win percentage is above 70. Okay. My risk reward is almost 2 to 1. Okay. My expectancy is also extremely high, and remember, this comes with the built-in slippages. Okay. So I don't think you have to do a lot of complicated stuff to enjoy the fruits of market, right? Now I'll quickly tell you how I will decide whether I want to scale or not. Okay. So you see, for example, but as you can see, right, almost all months are green, like and look at the
Ravi,
max.
sorry to interrupt, but you gave a very cool line which we can use for Stockmock marketing. You don't need to do the complicated stuff to enjoy the fruits of market. Stockmock. Yeah, man. Thank you. Carry on.
You're welcome. Okay. Now, okay. So this is where I use this correlation matrix, and I think I specifically asked you to include this information in Stockmock, right? So the reason why I want this, right? So what is correlation? Basically, the more the number is closer to 1, it means these two strategies perform the very same way. Okay. The more it is closer to -1, it means they perform extremely opposite way. Right. So there is a sweet spot, right? -0.7 to +0.3 or +0.4. If you have two strategies which is going to have this kind of correlation, even though the expectancy of these two strategies are lesser, the net expectancy is going to improve. Okay. Because this particular person is going to win on a days, the other person is going to lose. Okay. There are some days both will win. Okay. There are some days both might still lose. But because of our risk reward, right, you don't feel that pinch. Okay. You don't start questioning your strategy. Okay. That's exactly what I'm trying to do here. So again, I'm telling you, for two strategies, you are going to have 3 lakhs maybe. Okay. Right. Look at the overall profit. This is like, spending 6 hours, get 18.5 CAGR. If I send this as an SMS to someone, right, they'll they'll say, come on, this guy is a fraud. Okay. That's not the case. Right. That's never the case. There are very good, people might still ask, in this phase of market, how did it work? In this phase of market, how did it work? You can see that the data is here,
Yeah.
right? You have had COVID crashes here. You have had, the post-COVID market changes here. You have had the leverage changes by SEBI here.
Yes.
All the market conditions are put together, right? So this is why I'm saying the premise that you take must be very, very strong, must be highly probable. Okay. Thursday's option premium going to become zero,
Yes.
right? In Thursdays as in the expiry days, right? Nobody can change it, right? Unless or until something totally different comes up, right? But that's the power of the premise. That's the power of how you want to address that premise using your system. Okay. So now coming back to my slide, right? Yeah. Okay. So now coming back to a little bit of theory here. Okay. So what did I do basically, right?
Yeah.
I decided a system trigger that is going to be my premise. Okay. So when I want to enter, decay capture, I entered the strategy right away with a straddle. Okay. And I want to keep that straddle until the end of the day, 3 o'clock, 3:15. Okay. And if the market is trending, I want to capture the trend alone. So I have a stop loss. Okay. On each leg. Okay. And entry, we also see whether I want to enter immediately or whether I want to do a wait and trade. We explored both the options. Okay. And the stop loss. Okay. The 50% comes with my experience, right? How did I come to 50%? It's an experience. The more you spend the time there, you will know what is going to be the stop loss, right? Now, risk reduction, we also saw. How did we reduce the risk? How did we improve the expectancy? Just reduce the risk. Focus on reducing the risk in your existing strategy rather than improving the gain. You will eventually, start to improve your results, right? And then compatibility. Compatibility as in the correlation that we saw, how it improved the expectancy.
Yes.
Right.
Yes. Bro, just be with this slide for 1 minute. Listeners, Ravi has given the crux of finding a good system. I'll tell you why. Ravi has explored our features so much more than I have done it. That many a times he generally tells me that you have done it in this way. There is one way to think about doing it this way. And he has given you the proper risk with explaining that how you can reduce your risk by doing a trailing stuff, doing an opposite entry. How mitigating the risk eventually will improve the expectancy. Ravi, thank you for being so transparent till now. Thank you so much.
No problems, Ritesh. It's my pleasure, right? So I'm doing it for the first time also. So yeah, we'll see.
And you're doing it great. I can ask my listeners, is he doing great? It's his first time. Please encourage him as well. Yeah.
Thank you. And yeah, so these are the different components that I generally consider while designing my system, right? So now how I generally scale my system, right?
Okay.
So as you saw, we analyzed how to define a strategy, how to define a system based on correlation and expectancy and so on. But the most important part is the execution part of it, right? So my software background helped me to automate it, right? Especially it's all like there's a bit of luck there, things falling in place together, right? So when the nifty options came in, a lot of brokers exposed the APIs to place the orders and things like that happened. So it was a good time to automate these strategies, right? And of course, I also want to emphasize the fact that automated trades doesn't mean unsupervised trades. Okay. You will have to put a mechanism such that when there is a problem with your script or when there is a problem with the system that you are using to automate, you will have to be notified. and you must have like 2 or 3 minutes to at least exit all the positions if the if the automation is not working properly, right? So that's basically what I do. Okay. And like I said, I back test it, I forward test it at least for a couple of months, paper trade maybe, or maybe test it with one lot or so, and then automate and then test the automation as well. Okay, make sure that it runs fine. Okay. And how do I scale? Okay, how do I scale? Okay, I deploy one lot. Okay, one lot as in, let's assume 1x. Okay. And then to scale it further, I don't put any extra amount to that particular strategy at all. Okay. I would let the strategy gain the amount and then I will scale. Okay. That's what I do basically, because let's think about how we deal with the mutual funds, right? We don't pull money out of it. We don't add haphazardly, we don't add money to our mutual fund investments recklessly, right? So we have a plan. That's the way I look at the options trading as well, right? Let the option, let the strategy gain the money it need to scale, and then let it scale by itself rather than me placing extra money. The simple fact is that right. I don't have ready money to deploy whenever I can, so I'm just sugarcoating it this way. Okay.
Yeah.
Right.
Nice.
So so there are some other things, right? As a retailer, we must focus on getting the extra bit of earnings, extra bit of percentage, right? So what I do is like month on month, whatever I gain, I distribute it in this fashion. Okay, see, this is something that I do. Okay, I'm not recommending this for everybody. Okay. It's just the way that I do, and it does work for me. I'm so not recommending it because the risk perception varies for each person, right? So whatever the gain that the strategy has made, okay, it will get deployed in this fashion in mutual funds. Okay. And then how I reuse that capital to my trading is I pledge that mutual fund and get the margin. Okay. I want to emphasize that here. Okay. So Nitish, tell me, like, how many times have you heard, how many times have you seen the tweets? Oh my God, quarterly settlement has happened. I cannot trade today.
A lot, man, a lot. And this problem has been so prominent because earlier the quarterly settlements were so random that people don't know when it was going to happen. SEBI has just regularized it, but still it's a big problem.
Exactly. So that's why, right, uh, I invest all my gains in the mutual funds and pledge it to get the margin. So that won't take the quarterly settlement, into the equation. So it remains in my account always. That's very, very, very important, right? Plus the mutual funds that you have invested also gains, right? So it's additional income on top of the trading income that you do.
Yeah.
It may not be huge, right? It may not be huge, but it's something, right? So
Right.
these are some major advantages of investing your gains and then pledging to get the margin out of it, right? Plus, for me personally, this has brought in a lot of discipline. Okay, in terms of using the capital, I don't add capital recklessly. Okay, I follow this process. So whenever it comes in, that's when I would be able to use that capital. Okay.
I see. And many people, some of them whom I still talk to over the call, they still don't know what pledging means. So for our listeners, if you are yet to aware about pledging, please pause this video right now. Go search for pledging. Ravi is pledging from mutual funds. See what all options that you have you can pledge with and see if it benefits you. Obviously, it has many benefits. Yes, Ravi.
Yeah. So this is how I trade. This is how I have been doing it for some time. This is how I grow my capital. So I think thanks for listening to me patiently until now. Okay.
That's it has been brilliantly awesome, your first face to face, because you have not just highlighted your process of creating the strategies, you have clearly through your graph, the chart that you have shown, how you can mitigate the risk and create a powerful strategies. You also showed different kinds of strategy and what results that you like, or what are the things that you look for. And the new takeaway for me is also, when I'm creating a basket of strategies, the first thing now I look also for, which I was not looking earlier, is if my max loss is less than or equal to or very close to average profit on win days. And you gave a clear reason for that. So thank you so much, Ravi. I was not even getting a feel that it was your first podcast ever, because you were so confident and you were so generous and transparent in all the things that you are explaining. So thank you so much for that. First thing. Now I have some questions for you. May I shoot?
Absolutely. Yeah.
Okay. Ravi, it's a some norm going on out there wherein people feel that they want to get into trading so that they leave their current job. But here I see you love your job to the very next level. Like, uh, listeners, mark my word, he, if given an opportunity, he'll always choose his job over anything else. And now you have a passion for trading and you are spending time on trading as well, and you are managing both of these things very accurately. What do you want to say to those people who are just looking for the escape thing, trading as an escape opportunity? Is it worth doing or not?
Okay. So I had some content to talk about that as well, right? Like let me like I did a little bit before, right? Understand the constraints in whatever you are going to do. Okay. Let me may I share the screen again?
Yeah, if you have something, for sure.
Yeah, sure. All right. Okay. See, if you ask any trader, okay, the most important thing is to diversify the income streams, right? So when you already have a salary income and a trading income, you are very good, you have a very good diversification of the income streams. Why do you want to lose one of it? Okay. The second thing is, there are few money allocation that you will have to make as part of your life. Okay. One of such is the insurance thing, right? So if salary is so, I mean, doesn't matter what amount of salary that you earn, right? Given you have a constant, expectation of what is going to be your income, okay? It could be 20K, it could be 30K, it could be 40K, it could be 1 lakh, doesn't matter. Okay. You can plan your mandatory expenses from salary rather than a volatile trading income. Okay. The third thing is, okay, see, if you do your job well, okay, of course there are some constraints in the work environment as well, in the industry, the economy, things like that. But there is a high probability that, whether or not there is going to be a increase in the amount of income in, let's say in 2 or 3 years from what we earn right now today. Okay. So there is that's a high probability path, right? We are going to have an increase in income month on month. Okay. Now that's not a guaranteed in trading. Okay. So in order to find new avenues as a full-time trader, I need to start marketing my trading skills. I need to start, trading with others' money. The moment I become a full-time trader, the moment I start to trade with others' money, I'm not independent. Okay. I'm answerable to those people who have given money to me. Right. So I will never ever do that, right? In the later part of everybody wants to be very very independent, right? So I want to play with my money, risk my money, and I just want to be answerable to me and my family rather than anybody else. So these are some of the merits of being a part-time trader and doing your full-time job, right? See, I'll ask one more question. Let's say you are spending about 15 years of your education to get a job, right? So do you really think without even spending half of the time, can you earn the same money in trading?
Well, definitely not. Luck plays some role, but obviously not sure.
Exactly my point. Why do you want to waste that 15 years of education? Right? So that's again, it's just me, right? That's how I think. That's the reason why I always want to be primarily a software engineer and a part-time trader. Right?
Yeah,
That's me.
you are a great uh, software engineer and a very good trader as well. So I loved your slides, man. I loved all the knowledge that you have shared, Ravi. You can stop sharing. So, Ravi, thank you so much, man. I really enjoyed this podcast because I knew I've been in touch with you for over 2 years, like 2.5 years now. I know your thought process, but the way you have put it in your slides is amazing. So, thank you so much for accepting the invite, finally coming on the podcast. Any last thing that you want to say to our listeners?
Ah, again, I'm not a very big guy, right? So it's just, thank you for listening to me. It's been the first time that I'm doing such a thing. So I was nervous during the entire time frame. So
You, yeah,
apologies if something doesn't come out well. But
you didn't look
thanks very
like
much.
nervous at all. Don't lie, okay? Okay.
I can act well.
But thank you so much for coming, bro. So, listeners, I really enjoyed this conversation, man. I hope it added some value to your trading style, to how to create a strategy or something. For me, if I want to tell you something about Ravi, I would say he has changed my perception of how a part-time trader should be. And if you want to get the takeaway like this. He is a part-time trader, but he literally spends hours every weekends to learn and grow more in this trading line. He avoids the noise. He uh, controls everything risk related thing in his strategy. He follows the basics very well with not an intention to leave the job. That's what I've learned from him. He said, if given an opportunity, I'll leave trading, but not the job. But his passion towards trading to grow his income, you can clearly see from his efforts and other things that he has been in no red month for past 3 years. That's the key learnings. We should learn and grow in trading. Many people just find a strategy and they never grow in trading. They never learn from it ever. So never lose that thing in your trading career. I wish you all the very best, even if you're a full-time trader or a part-time trader. There are many things, there are many takeaways from this session. Um, the last thing that I always say, if you have not subscribed to our channel, please do that so that all our efforts are now. I can only see that if you like this podcast or not, or liking our efforts or not, if you're liking this video, sharing it with your friends, and if you're subscribing to our channel. So thank you so much for listening this far. Happy back testing. Bye bye.